loan broker extraordinaire, and we're here to talk about why interest rates should not be the reason that you don't invest in a home, why you feel like you cannot purchase your home today. So Mo is going to give us an example of what that'll look like now versus later, which today example that is hypothetical. But Mo, go ahead. Would love to hear a little bit of your thoughts around this.
Appreciate you having me. Appreciate you having me. Once again, hi guys. My name is Moe Hassan. I'm loan officer here at Rocket Mortgage, and I'm really happy to share this out with you guys. So check it out. Oftentimes I've heard it like in the market and just talking from different referral partners and whatnot. They'll say, my clients are saying, I want to wait a few months until houses go down a little bit, and I know that makes sense. That instead of paying 300, I want to pay 250. Um, there's more factors that go into it than just the home value. Or another person will say, I want to wait until interest rates go down. Uh, I want to show why interest rates shouldn't be the deciding factor in why you're buying a home or not. So for a loan amount, like average interest rate right now is 7%, let's say. For a principal and interest payment of $2,000, you can finance a house for 300 grand. At an interest rate of 7%, so 300,000. But as people are seeing is that interest rates are steadily climbing with really no plan to stop anytime soon, at least. Let's say, God forbid, interest rates were to hit 10%, that same $2,000 payment, your house now is instead of being 300,000, it's 230,000. So
Mm.
$70,000 less that you're able to finance or to be able to keep your payment at the $2,000 mark. I always say this to my clients, and this was said to me when I was buying a house, is that the interest rates will climb faster than your ability to save.
Mm.
And that hit me like a ton of bricks because I told myself I'm going to wait, I'm going to save more. But what's true is that the interest rates are going to go faster. So if now is a good time to buy and you found a payment that makes sense for you, then pull the trigger on that.
Absolutely. I love that. And I know Rocket and yourself, Mo, you have some awesome programs that some people may not even know
Right.
that they exist. I think sometimes people will hear about, down payment assistance or other things, but I'd love for you to share a little bit of that inflation buster, and some things that are they're able to do.
It's all about creative solutions right now,
Mm.
and some that we're doing just to make things a little bit less difficult. Excuse me, is through what's called the inflation buster, like you said. So they locked in at 7%, like we were talking before. They'll get 1% lower
Wow.
for the first year, free of charge. We won't cover for that, so that's pretty sweet. And then there's another one, which is called the 2-1 buy down. In other words, it's a 2% and a 1% buy down, where if the seller can cover in what's called seller concessions, a client can get 2% lower for the first year, 1% lower for the second, and then it adjusts back to the initial interest rate. So realistically, someone could lock in right now and never see a 7% interest rate, because God willing, interest rates will adjust within the next 24 to 36 months. Hopefully, no one has I don't have a crystal ball to see, but something else that reminds me of what's called the Rocket Advantage, where we're never going to sell the servicing off or anything. We're going to keep everything in house. But a lot of clients are like, okay, well, I'm locking in at 7%. I really don't want to be in this program for very long. This is not a long-term solution for me. I'm doing it because this is what the market is. Um, when interest rates go down, because they will, what goes up comes down, as long as they refinance within 36 months, we'll cover the majority of the costs associated with that refinance. That way we can show that, hey, listen, you can get taken care of right now with the 1% buy down, and you can get taken care of in the future when interest rates go down. There is options.
Awesome. I love that. And how does somebody know if they qualify for these programs? Is that just a simple conversation with you of kind of like, let's discover what we have available to us, or is that something that you get on the phone with somebody and you're like, these are some awesome programs we have? Does everybody qualify for those?
That's a great question. I mean, you never want to promote a promotion that not everyone qualifies for. If you're going to promote it to those who do. But if you qualify for a mortgage, then you qualify for this promotion. And there's a lot of different resources that, if you don't qualify for a mortgage right now, there's still plenty of time for us to get you into a point where you do qualify, whether it's through credit repair, whether it's through a down payment assistance program that we have, whether through it's, whatever different creative solution we figure out. But there's ways.
I love that. Very cool. And just to clarify, Mo, would that be something that people can take advantage of through the different types of loans, like through conventional, through FHA. Obviously, VA is not for everyone. It's for our veterans, for those who have served, for those, like you said, a
Great
marital
question.
spouse, or somebody that's a spouse that somebody was deceased that served. Is that correct? But does that
Surviving spouse,
cover
yeah.
all of those, or is that just specifically conventional? What does that look
No,
like?
it's for all programs. Actually, as long as it's not an adjustable rate mortgage where you're not locked for, a short amount of time, then it qualifies. Whether it's VA, FHA, conventional, we're not discriminating on any loan programs, which is pretty sweet. So that way, because oftentimes people are like, well, I don't know if I should take advantage of my VA loan, or if I can get this promotion on conventional. Well, no, you can get it on your VA loan also if you're a veteran of the U.S. Armed Forces or if you're a surviving spouse. So that's something that everyone qualifies for. But on how do you get it? I mean, whether it's you call me on my cell phone 313-877-3064. But no, yeah, within the first 5 minutes of meeting a client, I can find out whether we're going to be able to make this work or whether we need to take some. I tell everybody this: if I promise you one of two things by the end of this conversation, you'll either have your pre-approval letter or we'll have a game plan for what we knew to get there.
Awesome. So let's say, if I'm somebody that's interested in buying my first home, I've been renting for a while, and as in Atlanta, we're starting to see monthly rent increasing drastically, and people I think are feeling pushed out of that. But if I'm a potential first time home buyer and I'm not really sure what my options are, could you give us an umbrella view of these are the steps, this is what we'll go through, kind of that discovery period of, like you said, of that, can we get pre-approved, pre-qualified, what does that look like?
Definitely. I think the biggest factor that drives people away, especially first-time home buyers, is the credit check.
Mm,
Because every single lender, in any whether you're buying a car really anything nowadays, but we're specifically a home, that any lender will tell you we need to pull your credit. We need to pull your credit. We need to pull your credit, and that scares people away. Especially if they're not sure if they want to buy a house, not or not, right? I said, well, why, if I when you go to a car dealership, you don't run your credit until you've already secured the car that you want to buy for the deal that you're getting it for. You run your credit at the very end after you've determined I am purchasing this vehicle. Well, to remedy this, because we needed to meet our clients in the middle. Because I can't just if I were to issue out a pre-approval without running someone's credit, then I'm doing them a disservice. Right.
correct.
Because in order for me to determine whether I can lend this money or not, I have to determine if the financial character meets the requirements or not. So to meet them in the middle, what we've done is instead of doing what's called a hard inquiry up front, so a client calls me, they've never done anything before, they've never tried to buy a house before. I'll get their personal, their address, their birth date, social security number, and I run a marital status, veteran status, and I'll run what's called a soft inquiry. That way, it gives me the credit score that they need, and it doesn't affect their credit score adversely in case they determine that they don't want to buy a house. That way, they've lost nothing. They have nothing to lose and everything to gain. Is what I'm trying to say behind it. It's the equivalent of when you go on your Chase app or your American Express app and you check my credit score and it says soft income. It's the same thing. So you have nothing to lose, and that way you're able to determine. All right, well, here's my credit score is at. This is what I need to do to get it up to this point. Here's where this is what I qualify for. If I make this much more, I'll be able to qualify that. I'll be able to tell a client all that within the first 15 minutes of titling them. So I would say the first thing is just take that step. Take that step because it's a dream until it's until there's a game plan, then it becomes a plan, right? And then you just take step one, step two, step three, and then all of a sudden you're a homeowner. So it really isn't rocket science. It's Rocky Mortgage.
Oh, I love it. They need to put that in a commercial.
I was so bad. Oh my God, that was
And
terrible.
and Mo, would you ever recommend? And because I get asked this by clients of, oh well, I want to see if I can find the house first, before knowing my budget. I really want to see if there's a house out there that meets what I'm looking. Would you ever recommend that someone go home searching prior to having a professional, clear game plan and a conversation with a knowledgeable professional like you?
If you'd rather go sailing in choppy waters, go ahead. But if you want to go smooth sailing, let's plan, right? I honestly, like, one of the my biggest pet peeves, and you'll understand why, is when someone calls me and they say, Mo, I found the perfect home, please make it work. I hate that
Mm,
because I hate giving bad news. I want to say yes, 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 I got it. I was able to make it work for you. But when that happens, that and you're already emotionally tied to the property before we determine if we have the prerequisites to see if it's a possibility or not, you're just setting yourself up for failure. So, let's cross the T's, let's dot the I's, let's get our ducks in a row, let's find out where we stand before we get emotionally attached to anything. And that way we can really, like, home buying can be an absolute nightmare or it can be a dream. And it's a dream if we plan, and if we plan, then everything's smooth sailing.
Absolutely, I couldn't agree more. And I think that discovery process, kind of identifying what can we do, what can't we do, because like you said, I've had clients where they thought they were pre-approved for X amount, but then it turns out that, well, we don't have enough to put down for down payment or for closing costs, all those things that are associated with that, and so that dream becomes a nightmare, like you said. And that's neither of our goals here. Is to make it as simple as possible, make sure that we're communicating effectively, that it's a very simple, lovely, fun, and exciting process. Because the exciting parts, is we've talked about, is the, what am I gonna put in this room? What color are the walls gonna be? What are we gonna do on the backsplash, the tile, the table in here? And not necessarily the crunching the numbers. That's the behind the scenes work that you and I do that make it a very smooth sailing, very simple process. So I love that. Could not have said that better myself. And for those that are, would you say, maybe potentially nervous about purchasing a home in Atlanta? You and I have had extensive conversations on this, but kind of just a quick run through for those that listen and are watching this, as far as, is now a good time to purchase? And if I do, is it potential for me to refinance because the equity is building in the future?
I get what you're asking me. I think that's a fantastic question. It's really what that's doing is it's stepping away for a second. Because a lot of times we're seeing is I'm searching Zoom or on Zillow and I sort put the zip code that I'm looking for and all I see is the houses in the same price range that I've been looking for. It's the same properties for the last couple of weeks so it's you're really dialed into your specific area. One of my favorite things about being licensed in as many states as I am is it gives me a bird's eye view. It gives me an idea of where Americans are looking and where they aren't looking anymore. Like I'll give you a great example. A year and a half ago, I'd have on average 15 or 20 people at a time looking in California. I don't have a single person looking in California right now. I really don't. And it's not because California isn't the most beautiful state on earth. It's because it just doesn't make sense to buy there right now, right? It's literally more expensive to buy than it is to rent in certain cities in California. That's just ridiculous. But when you look at Georgia, for example, uh, this question it can't be answered. I can't say it's a great time to buy in America. But I can say it's a great time to buy in Georgia. I can say it's a great time to buy in certain states in America, like North Carolina, like Arizona, like Texas, like certain cities in Florida. There's certain areas. Like what we saw in 2008 was that it crashed in every market. That's what was the anomaly, is that it crashed everywhere. But there's certain safeguards and different things that we've done we put what's called the Consumer Financial Protection Bureau. They're like the specific team that through the government that was set to govern all policies and all rules to ensure what happened in '08 doesn't happen again. So there's different certain safeguards to prevent that from happening. I'm not saying it's not going to crash in certain areas in America, but it's not going to crash in every area in America. So specific to Georgia, I've never seen so many people flood one state in one time. The same can be said about Florida. The same can be said about Texas. Uh, the two, what a lot of different investors and a lot of the gurus, if you want to call them, like Dave Ramsey, Robert Kiyosaki, and Ken McElroy, and all of them, what they're saying is that supply and demand stay the two most decisive factors in determining property value.
Mm.
Supply and demand. And what the fact of the matter is that between people on the West Coast flying over to Georgia, Alabama, North Carolina, South Carolina, Florida, that region, or snowbirds that live in Michigan like myself, or in the neighboring areas, they're flooding down to those few states, and that's what's increasing demand at such a high clip. So if someone's worried about buying and you happen to live in Georgia or really any of the neighboring states, you just know that 5 years from now, there's going to be more people in Georgia. Well, that means more people, well, more demand, well, more supply, and more property value. So if you're planning to buy in Georgia and you're planning to hold on to it for at least 5 years, I'd say you're in good shape.
Awesome. Thank you for that thorough answer. I love that. And then Mo, what I'd love to hear too is, what's one thing that maybe you bring up as a lender, that maybe is somebody who, I mean, and whether it's their second home purchase, their first, their 10th, anywhere in between or exceeding that, what's one thing you feel like that maybe people don't always realize on the mortgage side that maybe you wish more people asked about, or something that you always make sure that you include and you educate on, that you feel like is really important for people to be informed about in your industry?
I think that's a fantastic question. I think that question becomes more and more serious with the market that we're in, and I'll elaborate what I mean by that. Like right now, like all of 2021, for example, interest rates were very low and they weren't changing. So someone that was pre-approved in February, chances are they were still pre-approved in August. Well, that's not the case in this year, right? If someone that was pre-approved in August, I can't tell you for sure if they're still pre-approved or not, right? And what I think if you are in the home buying process and you are planning on shopping for a home, I think it's so crucial for you to have your approval verified by an underwriter
Mm,
and have your documents your pay stubs, your W-2s, your bank statements, whatever your situation is, submitted into an underwriting team that for your sake of peace, right? For as the client, as the person shopping. So that way I've submitted my documentation, they've already reviewed me, I'm good for it. I know I qualify for this amount. I can shop around for this house. And then the second thing I would say is that as soon as you find a house that you like that potentially might be the one, let your lending partner know, your mortgage, your loan officer, just let them know, hey, I think this house might be the one. That way they can run some estimates that, the taxes on that house might be for a client or for a seller that has lived in the house for 20 years and they qualify
right.
for exemptions that you might not. Or, that house, it might be listed over list price, whatever the case may be. Just have them run the numbers so that way you know what to expect in terms of a monthly payment before you even put the offer on the house. That's planning in my book.
Exactly. I think that's so important. Well, perfect. Well, thank you, Mo, so much. I really appreciate your time and your thoroughness with everything, and anything else you'd like to add for any of our viewers before we wrap up.
It's oftentimes people get worried about whether whether they should take the step or not. But what a lot of people, one of the biggest quotes that's resonated with me till this day is the sooner you get on the right side of appreciation, the better.
I love that. Well, thank you so much, Mo. And genuinely, if anyone needs a phenomenal lender to pick their brain, to even see if, my credit right now isn't in a place where I want it to be, what are some steps I can to, potentially get that conventional, that FHA, or if you're a veteran, that VA loan, Mo is definitely the person to reach out to and to have those conversations with.
Definitely, definitely. And even if it's not something that's in the horizon for the next 6, 12 months, like it's better to just get a game plan so that way you know where you stand and that way it's no longer wishful thinking. But yeah, I'd be honored to help. Like I said, doesn't take but 10 minutes. And Danny she's the one you're giving me too much credit. Like I know, listen, I'm a walking talking mortgage, but she's the one that knows Georgia like the back of her hand. So if you want someone that's going to be on your side in your corner each step of the way and ensure that the job's done right, that's her gal.
Oh, thank you so much, Mo. And guys, look forward to more conversations and talks with
Definitely.
myself and Mo. And our goal is to educate and inform and to really help people meet that dream and have that reality of homeownership. So thanks so much for joining us.
Love it. Love it. Till next time.